Our top story tonight, growth engine is sputtering. Factory output shrinks by 4.2%, the worst fall in 3 years, but inflation continues to slow down. CPI hits 4.38% in November. The sell-off continues on Dalal Street. The Sensex sheds over 200 points yet again. The index has lost 5% from its record high. The rupee, though, gains marginally.
We will have to do is make for India, because the rest of the world is going to be less accepting of exports.
The RBI Governor Raghuram Rajan cautions against an export-led strategy to revive growth, says Make in India should also make for India, as he wants domestic consumption to drive growth. Decks cleared for the upcoming coal block auctions. The Lok Sabha passes the Coal Mines Act. The law has a provision to enable commercial mining of coal. The government gears up to move 7 crucial amendments to the Companies Act rules on related party transactions. Auditors reporting on fraud set to be eased. That's a CNBC TV 18 exclusive. SEBI trains its guns on 104 listed companies which have dubious fundamentals but mind-boggling stock movements. CNBC TV 18 has been exposing many such dubious companies over the last few months. India's largest IT firm TCS raises the red flag, says third quarter revenues will be hit due to seasonal impact and slackening of momentum. Well, in its third year, the Forbes India celebrity list has a new leader. For the first time, Rukh Khan has been pipped from the top slot by friend and peer Salman Khan. Good evening and thanks very much for joining us on India Business Hour. Cricket and Bollywood dominate the Forbes list, but enough with the celebrities. Let's get started with the Dre's trading action. There is no stopping the sell-off that we're seeing on Dalal Street. Volatility continues to haunt the market, and once again, a last hour slide led to some deep cuts, as you can see on your screens. The Sensex lost about 250 points as it moves back closer and closer to the 27,000 mark. The Nifty also lost nearly 1% as the markets closed at the lowest point of the day. The picture was a little bit bleaker for mid-caps, with the mid-cap index losing about 1% this afternoon. But in the currency space, the rupee ended the day with some marginal gains. It was a steady session for the currency. It remains near those 10th-month lows that it hit yesterday. 62.29 is the dollar rupee. But here's the big macroeconomic story. The index for industrial output for the month of October has slipped to minus 4.2% against 2.5%. That's on a month-on-month basis. Meanwhile, consumer price index for the month of November has come in at 4.38%. Lata joins us now with the details. Lata, disastrous IIP number.
Well, the industrial output numbers for October have been a disaster. Output has contracted by 4.2%, a little shocking because the core sector gave us the impression that output had grown by 6.3%. The biggest culprit is manufacturing, which occupies 80% of IIP. That has contracted by 7.6%, and within that, the biggest culprit are capital goods contracting by 23% and consumer goods contracting by 19%. Within consumer goods, consumer durables contracted by 35%. Well, we already had companies like Havells and TTK Prestige tell us that their second half output is going to be much worse than they thought. They have guided lower. Now it looks like the entire industry will come out and guide lower. So very bad news for stock markets. And you should see the downturn which we have seen for the better part of this week continue on Monday as well. The CPI numbers were good. 4.38 compared to an expectation of 4.4 is welcome. Within that, food inflation has fallen to 3.14 compared to 5.59 in the month of October. And non-food, non-fuel inflation, which you call core inflation, has fallen to 5.5. That's good news. But on Monday, you can expect the stock markets to concentrate more on the bad IIP number.
Well, the market will certainly look at that IIP number closely, Latha. Minus 4.3 is the number that we have to deal with. And remember, the numbers came out after the markets had closed for the day. So as Latha was pointing out, the markets will react when they open on Monday. So it's not looking good there. And the clamour for a rate cut in January is only mounting. But on to legislative action. The Lok Sabha has passed the coal mines bill, which was tabled in the lower house of Parliament. Today, the bill will replace the coal block allocation ordinance, which was promulgated by the centre after the Supreme Court decided to cancel 204 coal blocks. The bill, which adds enabling provisions in the Coal Mines Act and the Mines and Minerals Act, will facilitate the auction of cancelled coal blocks. Now, this is going to be big relief for the Power Minister Piyush Goyal. He's crossed the Lok Sabha hurdle. That was actually less of a worry. They are going to have to struggle a little bit in Rajya Sabha unless the Congress decides to support them, which is what we understand is likely to happen. Now, these provisions will boost coal production, increase transparency, and also lead to a drop in electricity prices. That's the claim that the government is making. Listen in.
जो कोयले की कमी है इस देश में, आज भी लाखों करोड़ रुपए का कोयला, जैसा सम्माननीय सदस्य जी ने कहा, आज भी कोयला विदेश से आता है, जबकि भारत में दुनिया का थर्ड लार्जेस्ट रिजर्व है कोल का। उसके बावजूद कोयला बाहर से आना पड़े, ये एक तरीके से शर्मनाक बात है। कोल इंडिया लिमिटेड की प्रोडक्शन बढ़ नहीं रही है, कई वर्षों से 1-1.5% बढ़ोतरी हो रही है, जो सम्माननीय विपक्ष के प्रमुख वक्ता ने भी बताया। उस परिस्थिति में कोयले की खदानें चलती रहे, नौकरियां बचे और देश में बिजली की कटौती ना हो, इसके लिए ये अध्यादेश लाना बहुत जरूरी था। आज के बाद जो भी खदानें दी जाएंगी, उन सब खदानों पे एक रिजर्व प्राइस होगा अगर वो सरकारी कंपनियों को दी जाएंगी, और अगर पब्लिक में ऑक्शन होगी जिसमें ई ऑक्शन के द्वारा इसको किया जाएगा। जो प्रोसेस ई ऑक्शन का डिवाइस किया गया है, उस प्रोसेस में बिजली की कीमतें बढ़ेंगी नहीं, लेकिन कीमतें घटने का प्रोसेस हमने एक तैयार किया है।
Well, that's a relieved coal minister. The Lok Sabha has been cleared and now the coal bill will move to the Rajya Sabha along with the insurance bill. The insurance bill will be tabled in the Rajya Sabha, we understand, on Tuesday. Now, with time running out in the winter session, the centre is moving faster with its legislative agenda. Amendments to the Companies Act have been moved after an uproar from India Inc. The centre is looking to change 7 key provisions of the Act. Just as we had reported, first, related party transactions are set to get simpler. Companies will only need an ordinary resolution and not a special resolution. Auditors will have to report on fraud to the government, which are only above a particular threshold. Any fraud below the threshold can be reported only to the audit committee of the company. The threshold will depend on profit or turnover of the company. The government is also looking to strengthen the National Companies Law Tribunal to speed up the process of winding up of companies. Now, these key changes to the Companies Act have been tabled by the Finance Minister in Parliament. RBI Governor Raghuram Rajan today endorsed the Make in India policy but added that it should also be Make for India. The governor strongly argued against encouraging manufacturing for exports, saying that an export-led strategy like China and other Asian tigers is not appropriate for India in the current times.
What I think we will have to do is make for India, because the rest of the world is going to be less accepting of exports. So if external demand is muted, we have to produce for the internal market. So we have to work on creating the strongest, sustainable, unified market we can, which means reducing the transaction costs of buying and selling throughout the country. What I'm counseling against is an export-led strategy that involves subsidizing exporters with cheap inputs as well as an undervalued exchange rate, simply because it is unlikely to be effective at this point. We constantly hear, an attempt to try and do that. My sense is that strategy is probably, if tried, going to be far less effective than it was for our Asian counterparts. I'm also cautioning against picking a particular sector such as manufacturing for encouragement simply because it's worked well for China. India is different, developing at a different time, and we should be agnostic about what will work.
Well, that's an important point of view coming in there from the RBI governor, saying an export-led strategy may not be the best for India at this point in time, and don't focus just on manufacturing or make in India, but also make for India should get the government's attention. Up next, after CNBC TV 18's expose, the market regulator SEBI trains its guns on 104 listed companies which have dubious fundamentals but mind-boggling stock movement. Details on the other side.
CNBC TV 18, celebrating 15 years of leadership.